Good afternoon, everyone. Thank you very much for joining us on this webinar this afternoon. My name is Chris Incledon. I am the sales director here at Joseph Mews, and we are going to be joined by Sophia Kazmi, who is going to discuss financing your investment from Qatar. So, uh, what we're going to cover today is basically how to become a UK property landlord from Qatar, and what we're going to cover is firstly I'm going to talk a little bit about us and what Joseph Mews do to kind of help you with your investment journey, and then we're going to talk a little bit about the UK property market and understand why it's a great place to invest right now. And then Sophia is going to take over and talk a little bit about financing your property from overseas. And then we're going to talk a little bit about a brand new investment, an exciting new investment opportunity that we've just taken on. So yeah, let's crack on. And I'm just going to talk about us as a business and who we are and what we do. So we were founded in 2001 by this man that you can see on the right-hand side of your screen, Mr. Andy Foote. Andy is a prolific property investor himself. He started from a very young age, but what he did see when he started his journey was that he was pretty dissatisfied with the customer service side of things. So off the back of that, Andy started a company called Seven Capital Group. Seven Capital are now one of the biggest developers in the UK. And Andy was kind of in control of the sales and distribution arm of the business, where they had teams all over the globe who were kind of selling their property. So they helped over 2,500 clients. They delivered a staggering portfolio of almost 900 million, and it was a great success. But a few years ago, we decided to rebrand to Joseph Mews Property Group, and the reason for this is because we wanted to have a bit more versatility in what we did and a bit more variety for our clients in terms of which developers that we work with, working in different locations, different price points, all of that type of stuff. So it's proved to be really popular for our clients and work really well, and it's helped us as a business as well grow our network and work with different partners on the ground in the UK. Next slide, please. So just our performance overview in numbers. We understand that investing overseas can be quite a daunting process, and it's important to understand who you're working with and working with the right company to kind of take you through that journey. So we've done quite a lot over the years, and our numbers kind of speak for themselves. We've delivered 4,270 units. We have been involved in 43 different developments, and we've helped deliver 630 million pounds of gross development value to our clients. So if we go on to the next slide, then this kind of coincides with the previous slide with the type of partners and developers that we work with. So you feeling comfortable with us and investing through us is one thing, but understanding who we work with and who our partners on the ground in the UK are is an important to understand as well. A lot of these companies here that you see on the screen, they are developers that we work with. They might not, you might not have heard of them, or might not mean much to you. They don't really shout about their businesses in the same way that you do in the Middle East. But you will notice the two companies on the top right-hand side, JLL and Knight Frank, two of the biggest property companies in the world. Knight Frank in particular, we have an exclusive relationship with them in the Midlands. So any site that they're selling or involved in, we have exclusive rights with them overseas. So it's testament to us as a business that we've been able to build these relationships over the 10 years that we've been running. And it should give you confidence that we've got the right partners on the ground in the UK to make your investment journey as positive as possible. Next slide, please. The customer service side of things, I mean, it goes back to what Andy started the business for in the first place. It's that customer journey element. It's the hand-holding process and making people feel comfortable. As I said, it can be a daunting process investing overseas. Some of my clients have never been to the UK. They don't they don't know too much about the UK apart from it being a great place to invest. You don't have to. Everything can be done remotely, and that's the great thing about working with a company like us is that we take you through that process. So from introducing you to finding the right investment, to introducing you to the right people like Sophia, who will take you through your mortgage process and get you more comfortable on that. We have a panel of lawyers that we work with every development that we're involved in. We'd introduce you to them to take you through the legal process. We've got a customer care team that will be in constant communication with you throughout your investment journey, and giving you updates as and when you need them. And then when we come to the kind of tail end of the process, when we actually complete on the property, we furnish the apartments for you so they're ready for a tenant to move in. And then the whole cornerstone of your investment, the how do I actually rent my property? We have relationships with some of the biggest lettings and management agents in the UK, in every location that we work in. So we would introduce you to them. They would take the key off the developer on completion. They will find you a tenant, and they will manage the property for you as well. So it's all done with by them, and it makes it a very kind of hands-off investment. So if there's any issues with the property or with the tenant or anything, then they take care of that for you, and you don't even know about it. So as I said, it's a hands-off process, and you're introduced to the right people throughout the whole customer journey. And as I said, Joseph Mews are with you every step of the way as well, not just when you complete or up to the point of completion, but 5, 10, 15 years afterwards as well. We help people build portfolios, and we rely on repeat customers as well. So we as a company are with you every step of the way. Next slide, please. Please feel free to drop any questions that you have in the Q&A box, and we will get to them at the end of the webinar. So why invest in the UK and the current property market update? So when you're investing in any location, it's good to understand exactly why you're doing that, and each market differs from other markets. The UK is it's one of the oldest and most invested property markets in the world, and there's a reason for that. It's because of its safety and its stability. It's understanding what you're trying to achieve, and understanding the market in more depth. The UK is a mid to long term strategy. It's not a market where you're investing now and within a year or 2 years you're looking at doubling your money. That's not what you're trying to achieve with the UK. It's understanding that it is a 5 to 10 year plan, but it's a safe plan. We can predict, we can understand where property prices are going to go. You can see from this graph, even through big economic crisis or world events that have happened, the UK property market has been incredibly resilient, incredibly strong over that time. And we see a gradual growth, and typically every 10 to 12 years, property prices in the UK they do double. So it's just understanding that element to it. I mean, comparatively, you look at Dubai, for example, where I'm based. It's a different market. It's only been around for 15 years. 10 years of that, it's been pretty volatile. I can't predict, I can't tell where property markets are going to be or values are going to be in Dubai in 5 years. I just don't know because we don't have the data around it. Yes, you could do very well, but you could lose, money as well. So whereas the UK, it's that safety, it's that stability. That's what we're investing in. And the reason for this is supply and demand. If we go on to the next slide, this is the biggest reason why we know and we understand where property values are going. Supply and demand is it's a big issue that we have in the UK. There's just so much demand and very little supply, and that's why we keep seeing property values increase. I've seen this firsthand. I worked in the UK for 8 years. I've worked in the property market for all this time and worked for developers, and I've seen that the costs have got more. It's harder to make profits as a developer. the cost of land has gone up. So there's less development that's happening, and there's more restrictions in place. So this isn't gonna change anytime soon. If anything, supply and demand is going to get worse. But for anyone who's looking to invest in the UK, it's a real positive because, as I said, this is what drives property values, and we're only going to see this kind of get worse in the future. But as I said, for property investors, this is going to mean that prices are going to continue to increase, and it's going to be great for if you're investing in this market. Next slide, please. So talking about the rental market as well in the UK, it's at the moment it's at an all-time high. It is a renter's market. One of the reasons for this is because of property values have gone up quite considerably. So there's less buyers in the market. 20 years ago, even 10, 15 years ago, there were more homeowners, there were more house buyers, but there aren't anymore, unfortunately. Again, it's not a great thing for the UK. You want to be able to have the younger population be able to buy homes and be homeowners in the UK, but unfortunately that's just not the way it's going. And this is going to be happening for the long-term future. As you can see here, an average home has 25 tenants wanting to view it, which is again great from an investment perspective. Is you're going to get a tenant that's wanting to rent out your property, and in all likelihood, you're going to get a very positive rental return. And again, that's why it comes down to this supply and demand issue as well. And that's what's driving rental values. Next slide, please. And here's just some more info on where the values in the UK are going. We've got a graph here which some of the biggest property companies in the world, like Frank, JLL, Savills, they're all saying that over the next 5 years, property values are going to continue to increase in the UK, which is again exactly what we want to achieve when investing into property. So I'm going to hand over to Sophia now, who's going to take you through financing your property from Qatar, and I'll leave it in her capable hands. Over to you, Soph.
Thank you very much, Chris, and good afternoon, everyone. Thank you for joining us today. So I'm going to walk you through this afternoon how you as investors from Qatar, whether you're first-time buyers or seasoned investors, how you can obtain a mortgage for an investment property in the UK and what the journey looks like. So we start off the next slide, please. So starting with a poll question, if you could please answer from one of the 4 drop-downs on your screen. What do you think is the biggest challenge in getting a mortgage as an overseas investor? Would you say lack of credit history in the UK, opening a UK bank account, limited lender options, or a complicated application process? We'll allow you just a couple of minutes to answer. Okay, so 100% of you have said, all of you have said a complicated application process, which is interesting. And the short, in short, really, we manage the whole process so you don't have to. Essentially, yes, at times it can be complicated, liaising with lenders, liaising with solicitors, lawyers, valuers overseas while you're based in Qatar and they're all based in the UK. It can at times be quite complicated or dealing with different time zones. But we manage all of that so you don't have to. We're based in Dubai. The bank will likely be in the UK that we'll be liaising with, and we mirror those UK hours. So we're able to ensure that the application is assessed as efficiently as possible. But we also work very closely with those underwriters at those particular banks, those valuers, the lawyers, the team at Joseph Mews, to ensure that the whole process is as seamless and as stress-free as possible. The other thing to add as well is when we do have our initial consultations, whether it be 3 months in advance of the property completing or 2 years in advance, we are able to give you an idea as to what documentation you need at the time when we come to starting the mortgage application. And again, that does alleviate a lot of the complications that otherwise we would experience. So by you being aware of what documentation you need to have ready, by you being aware of the process and the timeframes, it ensures that the process is essentially as seamless as possible. Next slide, please. Perfect. So just a few more frequently asked questions we often get, and just to point out, there is a Q&A box at the bottom. So for anything else that pops up, or if I haven't answered anything, please do put it in the chat box and we'll answer at the end. The first question, and probably one of the first questions I ever get asked, is how much can I borrow? It's the age-old question. We always say, typically for investors overseas, you can borrow anywhere between 65 to 75% loan to value. Now, there are one or two lenders that will even go a little bit higher than that, up to 80%. It always just comes down to quite a number of factors, and that's why we do a fact find, to go through your full financial profile and then ascertain what options are available to you. It depends on your income. Have you invested before? It doesn't necessarily have to be in the UK, but have you invested before? What passport do you hold? Where are you resident? Are you employed or self-employed? What do you have to evidence your income? All of those factors play an impact into what you can borrow, and also what are the costs associated with that borrowing. So when we do have our consultations, we'll put together for you an indicative term sheet that will very clearly detail all of those points for you to make an informed decision. The next question, can I mortgage multiple investment properties from Qatar? Yeah, absolutely. We often have clients who sometimes have a portfolio of properties. Maybe they're looking at remortgaging 2, 3, 4 properties all in one go, or perhaps looking at buying multiple properties at the same time through either their personal names or through a company structure. If that is the case, there are bespoke solutions that we can put together for you, and we'll approach specialist lenders that are able to offer you a product that's built for you and that's right for you. Can I mortgage if I do not have an income? Yes, you can. And the important thing to note, which Chris will go into in a little more detail when we go into the properties that we're showcasing, is that these properties are going to be generating a rental income, a passive rental yield every month. So if you don't have an income, there are banks that we can work with that will assess the mortgage purely on the rent that the property is going to achieve. And from there, they're able to confirm how much they're willing to lend you. We often have clients who are recently self-employed or recently retired, or although they're self-employed, don't have audited financial accounts if it's not a requirement in a particular jurisdiction. So sometimes demonstrating income can be difficult, in which case we'll just work with lenders that will assess the mortgage and the affordability purely on the rent. And finally, what are the benefits of speaking to a mortgage broker? I think the most important thing, as we touched on right at the beginning, is that we manage the whole process for you. As you've probably seen, interest rates in the UK are going down. They went down last week to 4.25%, and they are expected to continue to go down over the next couple of years. So with that, just one example, a lot of lenders are constantly changing their pricing, introducing new products every few weeks, and often setting hard deadlines to submit an application by a particular date in order to lock in a product, as an example. So by working with us, as opposed to if you were to do this directly, it ensures that we can package that application, have it submitted in a timely manner, but also ensure that it is going to be approved, because we're familiar and we know what the banks want to see and what documentation they will accept. So we really just, I suppose, alleviate that stress from you. We liaise with all of the parties associated, so not just with the lender, as we said, but all the other parties throughout the whole process up to completion: lawyers, valuers, the solicitors, the developers. We keep everyone updated to ensure that that process is managed for you, and that can all be done remotely, which is important to highlight. There's no need for you to travel to the UK at all throughout the process. Everything can be done remotely from where you are based in Qatar or anywhere else internationally. Next slide, please. So going into the different types of rates available in the UK, we touched on interest rates and where they have gone and where they're expected to continue to go. They're expected to reach, Goldman Sachs predict, nearer to 3.75 towards the end of this year. So with that, there are different rate types that you can opt for as an investor. Fixed rate mortgages, firstly, are essentially a rate that is fixed for an agreed period of time, and that's typically anywhere between 2 to 5 years. And that means, regardless of what happens in the market for the next 2 or 5 years, you have agreed with the lender to pay a set amount every month, and your rate remains the same. So it enables you to budget accordingly, and as an overseas investor, if you want to have that stability and comfort knowing what your costs are going to be for, let's say, the next 2 years, you can do so and just have the mortgage look after itself from the rent. Alternatively, you do have variable rate mortgages in the UK. And these will often track some form of benchmark, so either the Bank of England base rate or SONIA as an example. And that means that as interest rates fall, as they're expected to continue to do so, your interest rate will mirror that, and ultimately your repayments will go down as well. So some borrowers prefer that, especially if, as we said, where interest rates have gone in the last 6 to 9 months, and where they're expected to go this year. Some borrowers prefer to go for a variable rate mortgage and benefit from rate reductions when they take place. The other thing with variable rate mortgages, sometimes they do have less early redemption penalties, if any at all. So if you wanted to repay the mortgage back early or repay a large lump sum of the outstanding balance, you can often do so with a variable rate mortgage, with less penalties as opposed to with a fixed rate mortgage. Next slide, please. And in the UK, you also have different repayment strategies, which is a niche product that the UK and only a handful of countries across the world, in fact, offer. Capital repayment mortgages and interest-only mortgages. So a capital repayment, firstly, is a mortgage whereby every month, it's your conventional, probably one that many of you are familiar with, every month you are paying down the loan amount and you are paying down the interest. So that means at the end of the mortgage term, your mortgage is fully repaid. However, you also have what's known as an interest-only mortgage, and that's where you're just servicing the interest every month. So you're not reducing loan balance, you are just paying the interest every month. Now, as a result, that means your monthly payments are going to be lower. Your cash flow is then going to be higher, and it ensures then from an investor standpoint, you're far more liquid, enabling you to diversify and grow your property portfolio a lot quicker. Most of our clients who are buying investment properties will go for the interest-only route for that reason. Now, the important thing to note, and the question I get asked a lot is, well, what happens at the end of the mortgage term, because they still need to repay back the loan amount? And that's normally done through a couple of ways. Either remortgaging, and that's when we negotiate new terms with either a new lender or the same lender. At that point, the first loan is repaid and the second loan then takes over. When you do remortgage, it's important to note, and we'll look at it in the next slide, you can also capital raise, which means if there's additional equity that's built up in the property because the property's gone up in value and there's extra cash in there that you can extrapolate, you can do so at the same time. So you can remortgage and capital raise and then take that to reinvest it. Alternatively, you can pay it off from savings that you have in the background. Let's say you liquidate other assets, or of course, you can sell the property. If you hold on to it for 10, 15 years and it's doubled in value and you want to sell it, you can do so. You repay back the lender what you borrowed at the beginning when you first took out the mortgage, and then you can take your profit and move it on to the next investment. Next slide, please. So we've put together a very simplified example of the benefits of investing with a mortgage. It's important to note here, though, that this does not take into consideration interest rates and the rent that the property is going to achieve. It's purely an example of purchasing in cash versus purchasing with a mortgage and how you can take advantage of leveraging. So the first line just illustrates if you were to purchase a property in cash for £200,000 and hold on to it for 10 years. 10 years later, you sold the property for £300,000. Your investment was £200,000. Your profit is £100,000, which equates to a 50% profit on your initial investment, which was the £200,000. Now, if we go back 10 years and we assume that as opposed to buying that property in cash, you purchased it with a mortgage and you borrowed £150,000 at the bank, that also equates to a 75% loan to value mortgage. So you put down a 25% deposit. 10 years later, again, you sell the property for £300,000. Your investment was £50,000 now because that's the deposit you put down. Your profit is still £100,000. However, that now equates to a 200% profit on your initial investment. Now, if we look at the next slide, it demonstrates to you how you can leverage off that. So the initial £200,000 that you could have put into one property, you could in fact put into 4, with a total portfolio value of £800,000 whilst borrowing £600,000 from the bank. 10 years later, again, you sell each of those properties for the same amount at £300,000. Your investment was still £200,000, same as in the first line, except now you've bought 4 properties with the same investment amount. Your profit is £400,000, and that equates to a 200% profit on your initial investment. Now, as we touched on earlier, a couple of things you can look at doing to really benefit from this even more so is, as opposed to selling the properties, you could capital raise. The properties each have gone up by £100,000. You can take some of that out, you can capital raise and reinvest that into another property. At the same time, you could look at putting it on an interest-only mortgage, and that's essentially, again, another way of reducing your monthly payments, increasing your cash flow, and helping you to grow your property portfolio significantly faster. Next slide, please. So we've put together a very summarized, very brief cash flow for you, just to show you what sort of options are available to yourselves, particularly as residents in Qatar. And these are rates, just to point out, these are rates as of today as well. So this was for a client of ours who was self-employed in Doha. They were buying their first buy-to-let property in Lockside Wharf in Birmingham. And the purchase price for this apartment was £316,302. Now, this borrower in particular only wanted to borrow 60%. They wanted to put down a 40% deposit. You can borrow more. This borrower just wanted to go for a 60% loan-to-value mortgage and on an interest-only mortgage. So the loan amount equates to £189,781. The interest rate on this was a 5-year fixed rate at 4.99%. Now, this borrower in particular wanted to have the stability of knowing what the repayments are going to be for the next 5 years and budget accordingly. So they know that regardless of what happens in the market, whether rates go up or go down, their monthly mortgage repayments are going to remain the same. And that equates to £789 a month on an interest-only basis. So now, if we look at the column on the right-hand side and we look at all the costs associated and the rent that the property is going to achieve, the rent is £1,400 a month, which equates to £16,800 per annum. After taking off the mortgage repayments every month, the service charges, letting and management fees, this borrower is left with £387 surplus a month, which equates to £4,644 per annum. So, one, we know what our repayments are going to be for the next 5 years. It's important to note also that with this is just rent on year one. Every year the rent is going to increase year on year in line with where rents have increased in the UK and in line with the market. So that is not going to stay at £1,400 for the next 5 years. So that monthly net income is going to increase year on year. Secondly, as we touched on previously, you're also going to have the benefit of the capital appreciation in the property. If this investor holds onto the property for, let's say, the next 10 years, or even if we remortgage in 5 years' time, any additional equity that's built up in the property, when the property value is up in 5 years' time, we can then take that out and again reinvest it into another property, helping them grow their property portfolio. Next slide, please. And finally, we've put together a very simplified checklist for you to have a look at this afternoon, and just to start thinking about what documentation you would need when we do come to starting an application for you. As I mentioned at the beginning, it's important to note that we will put together a specific checklist for you based on the lender that we select and based on your circumstances, but this hopefully just gives you a good idea as to what you would need. So the most important and probably the first documentation we collect is identification. So we'll need a copy of your passport and a copy of your proof of address for where you reside. We'll also need details on the property, which we'll gather from Chris and his team, which will determine essentially how much the bank is willing to lend you, because what the property is going to rent for, as it's a buy-to-let property, as we said, and it's going to be generating a rental income, does heavily determine how much the banks are willing to lend. From there, we can then work out the deposit requirements, and then from there, we will then be able to ascertain, as we said, the loan amount as well. We'll review your financial strength. So we'll look at income, whether you're employed or self-employed, and what documentation do you have. As we said, if we don't have income, that's fine. There are lenders that we can work with who do not have requirements for that. We've put credit report on there, but that's important to note. It's not a UK credit report, not always. Sometimes they'll need a credit report for where you live locally, in Qatar as an example. But again, that isn't always the case. Some banks don't require credit reports at all. UK bank account. So some banks will require you to have a UK bank account and for the mortgage repayments to be made from your UK account. In fact, most banks do. We can assist you in setting that up, and that can be done as quickly as within 24 hours. Alternatively, if you do not want to make your repayments from a UK bank account and you want to make them from an account in Qatar or the US or anywhere else internationally, we can also work with banks that will accept that as well. And just the final point to mention is, although we're not qualified to give the advice, it's always recommended that you speak to a lawyer and a tax advisor and just have an understanding as to what the other costs associated will be, and also how best to structure the purchase in a way that makes the most financial sense for you. In the UK, you can purchase properties through a company, as an example. So if that makes more financial sense for you, then there are also mortgage options that will facilitate that. And that doesn't change the pricing either as well. So there are mortgage options available to you, whether you want to buy in your personal name or in a company. But it's worth just having a chat with those specific consultants who are able to guide you in the right direction. Next slide, please. I think that's it for me. I'm going to pass you back over to Chris now, who's going to walk you through our investments this afternoon. Thanks, Chris.
Thanks, Soph. Yeah, so just to jump right into it. So to choosing the right location for your property investment, I'm just going to quickly go through, the things that you need to look at or identify, when when focusing on a specific investment location, and then we can jump into the new opportunity that we do have. So um, the the locations that we focus on, they're not London, that they're the regional cities in the UK, the second and third cities that have a lot happening within them. New connectivity, lots of future developments, regeneration, good institutions, jobs and market trends that are coming up, rental supply and demand. So it's the areas that have all of this happening at the moment, and that's where we're going to see the appreciation that we want. Not all of these locations or cities have all of this happening, but they have one or two, which is a great reason to invest in these locations. And obviously, we help with that, we advise, and we work hard to get the developments, get the investments in the right locations where we're going to see the most growth. So if we go on to the next slide, I mentioned that we don't really work in London, and there's a reason for that. It's because it just doesn't have the same potential as the regions do. So if you look at, some of the most investable locations at the moment, Birmingham, Derby, Leeds, they all have a low property price point. They have a really good average rental yield, and they have a high 5-year price prediction. And again, they've got all these key factors happening. Birmingham, for example, has got the introduction of high-speed rail, which is going to connect London and Birmingham within 45 minutes. That's being delivered in 2029. Something like that is a really good reason for investing now, because as we move closer to the delivery of HS2, we're going to see price points increase. But comparatively to all of these regional cities, sorry, if we go back one. If we go back one slide, comparative to these regional cities, if you look at London, it's got the average property price is pretty much over double. The average rental yield is half, and the 5-year price prediction is just nowhere near as much as the regions. And these are I understand that people want to focus on London. They feel comfortable investing into London, but to be honest, it's not the place where you're going to see the return on investment that you want. So now, if we go on to the next slide, you can see from this graph, ideally, that you want to be as close to the top left-hand corner as possible, and that's what makes a really good property investment. So, that low average property price and the high average rental yield. So Leeds, Manchester, Birmingham, Derby, these are the areas where you should be considering investing at the moment. Next slide, please. So speaking of Derby, which was one of those locations on the top left-hand side of that graph, we have a brand new development, really exciting opportunity that's being brought forward. It's called Loom House. Now, again, I can't go into this into too much detail because I'm conscious of time. But Derby has a lot of that stuff that we've just been talking about, a lot of that happening at the moment. It's got 3.1 billion pounds of regeneration that's currently happening within the city centre. It's got a limited housing supply, so not much really good quality stock, good housing, and it's got actually a really high average salary. So the average person there is making it's got a high average salary. It's the second highest average salary outside of London. So there's some really good jobs on offer there. There's some massive manufacturers, Rolls-Royce, where they make the jet engines, their headquarters are there, Toyota, Bombardier, all of these massive manufacturers have their headquarters in Derby. So there's a lot of jobs, earning really good money, but there's limited housing, which makes a really good opportunity for Derby. So to get on to our new project, Loom House, it's if we go on to the next slide, please. It's being done by a developer called Elevate, and we've had a long-standing relationship with Elevate. Their headquarters are in Birmingham. They do a lot there, but they also do lots of stuff in Derby and Nottingham and all around the Midlands really. They're a fantastic developer. What they deliver is the highest quality. It's been incredible to be able to work with them on some different projects. But here, as I said, Loom House, it's an off-plan investment, so it is due to be completed in Q1 2026. It goes back to what I was saying earlier in the webinar. It's got that low property, that low starting price point, £148,000, and it's got that high average rental yield, 6 to 7, even 7.5% we're looking at in Derby. And again, this is because of this supply and demand problem that we have. Loom House, when it comes to fruition in Q1 2026, it's going to be one of the only new build developments that are available to rent at that time. And that means that we can really push the rental values and get the yields that we want. A lot of the time, when a market's oversaturated, it can be difficult to rent out your property. But here in Derby, that you don't have that problem. This is a really unique opportunity because of that reason, that it is going to be one of the only ones on the market that are going to be available to rent. And again, with the quality, it's better than anything else that's on the market currently. So really good opportunity here. Because it is off plan, all you need now is a 20% deposit. That 20% is taken after 28 days of going through the legal process, and then there's nothing else that's needed until completion in Q1 2026. Okay. If we go on to the next slide. So the location of this is what makes it really, really unique. It is right in the city centre, okay, and you're next to everything that you need to be close to. Some of the big companies that I've mentioned here, Rolls-Royce, Bombardier, Toyota, they're very, very close to Loom House. And then all of the main kind of amenities and everything that you need within Derby, the nice restaurants, the shopping centre, everything else is right next door, where you can see where the Derby shopping centre is there. So it's so well located, and you're only 2 minutes away from the train station as well. So Derby is an incredibly well located city. It's actually the most central city in the UK, so you can get to the north and the south very, very easily. And you can get to some of the biggest cities in the UK within half an hour. I mean, Nottingham, Leicester, Birmingham, they're all half an hour away on the train. And then you can get to Manchester within an hour, and then you can get to London within an hour and a half. So it's incredibly well located and well connected, great for businesses. And this is why we're seeing really high tenant demand there at the moment. We're seeing really good property prices increase at the moment, really good appreciation. So yeah, it's for all you need really with this one is a deposit of anywhere between £30,000 and £50,000 to start your investment journey. And Derby in this particular development is a great place to start. So if we go on to the next slide, please. This is actually one of the show flats that you can see. We've got a video here, just so you can see the quality and what's being delivered. So you can see there the type of quality and the developer that we're working with. Here's a little bit of information about Elevate. I've already spoken briefly about them, but there is no stone that's left unturned in terms of what they deliver and their quality. From the door handles to the taps to whatever it may be, the finer details are just the highest quality. And as I said, there's a lack of really good quality housing in Derby, and that's why we're seeing it be one of the most popular investment locations at the moment. We had a neighbouring development called Nightingale Quarter, which was 500 units. That has all been sold out. It's all been rented out as well. It rented incredibly fast and quickly. So that just kind of, there's good comparable evidence there to show you that the type of demand that we do have in Derby at the moment, and where it's going in terms of that kind of appreciation and growth that we want to see. So we're in good hands with Elevate, and yeah, I can't wait to see this one come to fruition. So next slide, please. So just to understand the payment plan a little bit more, and I have touched on it, but essentially, if you were to reserve in Loom House, how it would work is that you put down a £2,500 reservation fee, which is immediate. We can take the unit off the market then, and then the next step would be to get into the legal process. The legal process takes 28 days, and that's when you pay your 20% deposit. So here, in this scenario, we're looking at £148,000 studio, so it would only be £27,000 deposit on after 28 days. And then when we get to completion, which is Q1 2026, that's when you pay your 80%, whether you're getting a mortgage, as Sophie has talked about, or whether you're doing it in cash. The outstanding balance is £118,000. So if you are utilizing a 65% mortgage, an extra 15% is due, so only £22,000. So that's the payment plan is really, really attractive. And as I said, all you really need now is that reservation fee and that 20% deposit. Next slide, please. We do have other opportunities as well, guys. As I said, we focus on lots of different areas in the UK. We've got a couple of opportunities in Birmingham, which is a great investment location right now. We've got an opportunity in Leeds. We've got one in Ascot, and we've got one in Manchester as well. We've got Ascot and Bracknell, actually, which are kind of surrounding areas of London. So look, if you've got a specific location in mind, or a specific price point, then look, I'm sure we've got something that will suit you. So please reach out if you want to discuss about any of these other opportunities as well. Next slide, please. We do have a special offering for anyone on this webinar, £1,000 towards your legal fee if you do end up reserving with us. And what it takes to be a Joseph Mews client, realistically, we want to be able to work with people that are able to invest into our developments. So realistically, what that means is having immediate access to £50,000. I mean, as you can see with Loom House, you can within 28 days, you can anywhere between £30,000 to £50,000 works. You're open to ongoing consultations, actively exploring UK property opportunities. We'd like to understand whether you're ready to move forward now, and have that kind of clear motivation and strategy to proceed immediately, and then obviously to adopt that kind of long-term growth. As I said, the UK is a mid to long-term strategy. It's not something which is you're going to be getting your returns immediately. It's understanding that growth and what you're investing in as well. Next slide, please. So we are actually going to be in Doha on next Friday, 23rd of May. We're going to be at the Four Seasons Hotel. So if anyone would like a face-to-face consultation to discuss, the market or our opportunities in a bit more detail, then please reach out and we can get something booked in. So next steps, look, if you do want a meeting, then please let us know, and one of us here will reach out and get something booked in. And we'd like to know, where you are in your investment journey. So please, if you do click one of these boxes, we will reach out and we'll attempt to book a meeting with you. Okay. And just to get onto the Q&As, so if anyone has any questions, please put them in now, and we'll get to them. I think we do have a couple already, so which is great. Yeah, Soph and I will try and get through these as best as we can. But as I said, if you've got any questions now is the time to put them in the Q&A box, and we will get to them. So we have one. What are the tax implications in terms of buying and then renting out? Yeah, so there is tax involved in buying property in the UK. You know, like most countries, there is always tax involved. So what you're in terms of your immediate tax, I guess when you actually complete on the property, you will be paying a stamp duty tax. It's a one-off payment, and for overseas investors, that is 7% of the property value. So that will be paid on completion. It's you know, stamp duty is as I said, it's a one-off payment, but when you're kind of looking at the longer term strategy, the 5-10 year plan, it kind of pales into significance in terms of, you know, the returns that you're anticipated to get. So it's a you know, it's a tough pill to swallow sometimes with that 7%, but as I said, it's just that one-off payment which is becomes insignificant in the longer term. And then when renting out, it depends what you're doing. I've actually got another question here about do you buy in your personal name or in a company? So I can kind of cover both of this now. So in terms of, you know, when you're actually renting it out, if you do buy in your personal name and you don't have any other income in the UK, the UK has a double taxation with most with most places around the world. So you do get £12,500 tax-free allowance on personal income. So we would always recommend that you would buy in your own name for your first property if it's your only bit of income that's coming in, because you do get that kind of tax-free allowance. And then if you were to buy more or build up your portfolio where your income becomes greater and goes over a certain tax threshold, then we might recommend that you buy through a company because there are some good tax advantages in terms of your income. It's limited at 18%. So yeah, again, that's something that we can you know, we can discuss a little bit more in detail depending on your criteria and what you're looking to achieve. Um, does anyone have any other questions? I've got one. How does it work in terms of renting out your property and the fees that are associated with that? Um, so yeah, as I mentioned when we talked about the customer journey element of it, we would introduce you to the lettings and management agent. They'll take control of the property and they'll find you a tenant and manage it for you. We Normally, it depends on where you're buying and what location that you're in. But normally, you know, a lettings and management fee is around 10 to 14%. That's the kind of standard. Uh, we get good rates on that because we have these relationships and we do refer a lot of clients. So we do tend to get better rates. I'd say normally it's around 10%. However, in Derby, funnily enough, we've got a great relationship with one agent there, which offers us anywhere between 7 and 8%. So we are getting quite a good saving there on your lettings and management fee as well. So yeah, it's a necessary cost, but as I said, we are able to get a good rate on you know, on every location that we're based.
We've also had a question here of, as per my knowledge, mortgage with interest is not Sharia compliant. Please provide Sharia compliant options. And there are options that we work with. Obviously, we're based in the Middle East. We have a lot of clients whose preference is Islamic financing, and there are certainly lenders out there. In fact, the option that we had quoted on our case study was actually a Sharia compliant option. There are different types of Sharia financing. There's Ijar, there's Murabaha, there's, you know, there are so many different structures, and again, through personal name or through a company. But in short, there are Islamic financing routes that we can offer.
Great. I think that's it for now. Is anyone, before we sign off, anyone else got any more questions before we go, or I think that's it. Here we go. Is rental income guaranteed throughout the period or based on you finding a renter? Basically, am I still exposed to? Yeah, okay. Good question. Uh, we don't guarantee rent in the UK. It kind of it goes back to what I was discussing earlier about the market and where we are and being in a rental market. The 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 market kind of guarantees your rent, okay? And we do a lot of research and get a lot of data on certain areas of where we're, or based on previous developments that we've worked on as well, understanding what our expected rent is in these particular developments. And look, typically that there's no void periods. What we aim to do is that before you actually complete, there'll be uh, a a show apartment like you've seen in Loom House, for example, that we can show potential renters around, and they can understand exactly what they're due to be moving into, um, and we tend to be able to get a renter locked in prior to you actually completing. So in terms of void periods, we don't get them. As I said, the market's too strong in the UK to really get that void period, especially in somewhere like Derby and Loom House where there's a limited supply. So that I've rambled on there, but in short, no, we don't guarantee rents, but the market essentially guarantees your rent.
Also, just to touch on that from a lending perspective as well, you'll find that if you're purchasing properties with a guaranteed rent, the lending options are a lot more limited. The lenders do not want to take a security against properties which have those guaranteed rents because ultimately it's a huge risk for them. Those properties are being sold with an incentive. And what happens when that guaranteed rent expires? That's going to impact the value of the property. So from a lending perspective as well, there are far fewer lenders that will offer mortgages on those properties as well.
Yeah, and just to expand on that again, if you are looking at properties with guaranteed rent, normally they're a certain type of property. Our focus here is capital appreciation. It's getting that return on investment that you want. And that's why we deal with certain investments, certain developments. With these guaranteed properties with guaranteed rent, you tend to don't see the appreciation that you want. Yes, they might yield a little bit better. But they don't get, the biggest return that you're going to see is that appreciation, and you don't get that with these guaranteed rental properties. So, do you have to pay tax on the rental income from property in UK overseas? Yes, you do. Yeah. So all of your income that you're getting in the UK will go into a UK bank account, and you do have to pay tax on that. As I said, you do have that £12,500 tax-free allowance. So, for example, if you were buying a studio in Loom House, which is getting you £10,000 to £12,000 a year, that would be tax-free. But as you start buying more property and your income goes up, and you get over a certain threshold, then that's when you start having to pay income tax. But as I said, there's ways that we can limit that by looking at buying in limited companies or anything like that. We have tax advisors that we can put you in touch with and speak to you about all of this. Okay. Well, look, thank you very much, everyone, and I hope that we've answered your questions to the best of our ability there. And look, again, thank you very much for coming on. I hope you found it useful, educational. And if you have requested meetings, we will reach out and get those booked in. And as I said, we are over there next Friday. So if you'd like to meet face to face, then we can get that organised as well. So thank you again for coming on. It's always
Pleasure.
great to have you here.
Pleasure.
Um,
Thank you everyone for
and
joining us.
yeah.